Hello everybody and welcome to Calfield Services channel. Today we are going to talk about the common startup mistakes to avoid if you are an SME in Botswana. Picture this. You are playing a game of chess, but your very first two moves sets you up to lose the entire game. That's called a fool's mate. For startups, that's when an early misstep dooms you before you even get rolling. Today, we are diving deep into the top blunders SME or entrepreneurs must avoid in order to stand any chance of survival. Mistake number one, skipping market research. Failing to understand your customers and the competitive landscape is like moving a pawn into your opponent's territory without any backup. You need data to know who your buyers are, what they need, and how you differ from your rivals, or how you can differ your product from your rivals. Talk to potential customers face to face or through surveys. Scan the government for statistics. Go to places like Statistics Botswana for demographic insights. Spy on competitors' offerings, pricing, and customer reviews. Mistake number two, neglecting financial management. Poor cash flow management is the silent killer of startups. If your cash dries up faster than you can sell, you are playing your king into a check. You need to separate your personal and business accounts immediately. You need to build a monthly cash flow forecast and update it on a weekly basis. Then use simple accounting tools like QuickBooks or have a local bookkeeper assist you with your records if you are not financially sound in keeping records of your business. Now, mistake number three, forgoing a solid business plan. Going in blind without a roadmap is planning to fail. A business plan forces you to think through revenue models, cost structures, and growth milestones. It's also critical when pitching to financiers like CEDA or commercial banks. You need to define your mission, your vision, and at least a three-goal implementation plan. And then you have to outline your product or service, its pricing, and the distribution channels. You have to include financial projections, and you have to know your break-even analysis point. Mistake number four to avoid, remember, overlooking legal and regulatory steps. Now, not registering with SIPA, ignoring tax filings with BURS, or skipping industry permits can lead to fines or even worse, forced shutdowns. So compliance isn't optional, it's foundational to long-term survival. So you have to register your business, either a company structure, PTY, LTD, sole proprietorship, whatever form it may take. Then you have to apply for relevant trading licenses, from food safety to telecom. And then you have to stay on top of VAT, PAYE, and corporate tax deadlines. Mistake number five, trying to serve everyone. Casting a wide net can dilute both your resources as well as your brand. Now, instead of trying to provide a solution or a product that serves the whole market, you have got to identify the niche you can dominate. For example, luxury tourists, budget students, village retailers. You have to focus on one segment and tailor your messaging exclusively to them. You have to create customer persona with clear pain points. You have to craft marketing that speaks directly to that particular group. And then you have to expand once only you have nailed product market fit. Mistake number six, which is also the final mistake I will cover in today's session, underinvesting in marketing and branding. You might build the best product here in Botswana, Gaborone, but if no one knows it exists, growth will stall. Relying solely on word of mouth is a slow burn. Invest in digital channels and local partnerships to scale awareness. Run targeted Facebook and Instagram ads collaborate with local influencers or micro-influencers, attend trade fairs, both locally and internationally if your resources allow. So this is all I wanted to share today. But before I close off, I will share with you what generally happens to SMEs that are established in Botswana in the first 10 years. And then hopefully this will also add on to the awareness I wanted to create with my earlier presentation. In the first 10 years of Botswana, statistically it has been proven that, or it has been shown that there is higher attrition and narrow survivorship of SMEs. Startups in Botswana face steep mortality. Roughly about 80% of small businesses close their doors within the first decade of operations. And according to the 2016 Census of Enterprises and Establishments, a large share of enterprises formed between 2006 and 2015 were no longer active by the time that survey was carried out, underscoring the high attrition in the first 10 years of inception. The other challenge you have to grapple with is driving early failures. Several systemic hurdles drive this early demise. Limited access to capital is one of them, which is also one of the key ones. Domestic market of just over 2.5 million consumers limit the net of potential consumers to your product. Then there's skill shortages in critical fields like IT and marketing, and complex regulatory processes that delay licensing and inflate costs are some of the driving forces which leads SMEs to fail. So young tech ventures and traditional SMEs alike often burn through the runway before sustainable revenues materialize. So what also happens when funding dries up? That is for those, obviously every SME that starts up has got to have some form of funding, one way or the other. So when initial funding, whether from the savings, angel rounds, or early grant runs out, only about 20% of enterprises secure follow-up financing or follow-on financing. The other 80 usually face shutdown or dramatically scale back operations, shedding off staff in the process, and pausing growth plans. Commercial banks generally avoid financing early-stage ventures, and with venture capitals still nascent, many entrepreneurs find themselves in a cash crunch with few rescue options. So what can be the path to survival? For the other 20% that survive or find a way to get an add-on financial assistance, they tend to navigate through this challenge of dying off in the first decade of operation. And they end up having an opportunity to diversify their revenue streams, tapping into government programs like CEDA, loans, or the Youth Development Fund grant. Others forge corporate partnerships and expand into regional markets through the African Free Trade Area arrangement to access larger base customers. Those who bootstrap effectively focus on niche segments, and they maintain lean operations and stand the best chance of evolving from precarious startups into established enterprises. Having said all that, if you take heed of the tips that I've shared earlier on, and many others for sure, because I haven't obviously turned the page over in terms of challenges SMEs face. Some other challenges are in actually competing in the market for opportunities. I also mentioned earlier on there's a limited customer base, so opportunities to access this market is also limited. It's competitive. Sometimes it's issues of corruption which inhibit certain growth prospects of emerging SMEs. So all these challenges, policy issues put together really create a colossal of a negative operational environment for SMEs. So these are some of the challenges that you need to grapple with before you even put your product out there in the market and test how it performs. So I would take this opportunity to say invest more in educating yourself with knowledge necessary for you to be able to grapple with these challenges when that time comes when you start off your SME. So I wish you all the best for all of you who are aspiring entrepreneurs and those of you who are already out there in the market and grappling with some of these challenges. They would resonate well with you, and some of you might have already found solutions to some of these problems, but others don't. So it is our prerogative to share some of these challenges and opportunities so that we help each other in the SME development environment. Until next time, bye for now.